Alright, so if you're someone that is struggling with losing trades and you don't know why or how to fix them, stick around because I'm going to give you the secrets, and I promise you, you will not regret it if you stick through the entire video. Let's begin. Alright, let's get straight to the point. Most traders who lose money think they just need a better indicator or a new strategy or maybe a better broker. But the truth is, those aren't the real reasons you're losing. What keeps traders stuck and unprofitable, it's not a lack of tools, it's not a lack of market knowledge, it's a lack of structure, discipline, and psychological control. We're talking about things like overtrading, letting losses run, chasing trades out of boredom or FOMO, ignoring your plan when emotions kick in, etc., etc. Now, here's the reality check. 80% of day traders quit within 2 years, and only 5% ever become consistently profitable. Those numbers aren't random, they're the result of people making the same mistakes over and over without fixing the root problems. That's what this whole presentation is about. Getting to the real issues behind why you're not seeing results yet, and what you can do about it starting today. Okay, so this right here is the number one reason most traders fail. Psychology. Not your indicators, not your setups, not even your strategy. It's what's going on in your head before, during, and after the trade. Ask yourself, are fear and greed calling the shots? Are you still enjoying trading? Or are you just going through the motions? Do you also find yourself holding on to losers, hoping they'll come back? Look, let's be real, most of us don't blow accounts because we don't know what to do. We blow them because we don't do what we know we should. You see a setup, but you hesitate because you're scared. You're in a winning trade and you cut it early because you're afraid it might reverse. You're down on a position and instead of cutting it, you keep telling yourself it'll bounce, just give it a little more time. That's not trading. That's gambling dressed up in a trading platform. Now look, traders who last, they don't let emotions run the show. They build habits that remove emotion from the equation, like journaling, meditation, and even pre-committing to exits before they enter a trade. Psychology isn't just some buzzword, it's the foundation. And if you ignore it, you'll keep repeating the same emotional mistakes until your account taps out. So ask yourself, are you thinking like a pro or reacting like a gambler? Now this one's gonna sting a little, but it's necessary. Let me ask you, are you lying to yourself? Are you calling something a win just because price came back eventually, even though it went 40 pips against you and violated your plan? Be honest, was that skill or was that luck? Here's another one. How many times have you seen a perfect setup and didn't take it? You had the zone, the confluence, the signal, everything lined up, but you froze, you hesitated, you second guessed, and then you watched it run without you. That's not a strategy problem, that's a self-trust problem. Or maybe you keep holding on to bad trades. You see red on your screen, but instead of cutting it, you start bargaining with yourself. Maybe it'll turn around, I'll just wait a bit longer. And when it finally does turn around once in a while, you celebrate it like it was a good decision. But that was a mistake that got lucky, and you just taught yourself to repeat it. This is the stuff that kills consistency. You can't fix what you're not willing to admit. So ask yourself, am I building habits that will make me consistently profitable? Or am I just surviving day to day, hoping for a lucky break? Because surviving and succeeding are two very different games. Alright, let's talk about execution, because having a strategy means nothing if you can't follow it. You ever notice how some of your worst trades happen when you technically did everything right? You had a bias, you marked your zone, maybe even saw the reaction, but you entered too early. No confirmation, no structure, just vibes, right? And what happens? You sit through consolidation, price drops you up, you start second guessing, and now you're either stuck in a loser or getting wicked out right before the move actually happens. That's not bad luck, that's bad timing and poor execution. Ask yourself, do you have clear rules for entry and exit? Do you know your stop loss and take profit before pressing buy or sell? Are your winners consistently smaller than your losses? If that last one hit a nerve, you're not alone. Most unprofitable traders take profits way too early out of fear and hold on to losers way too long out of hope. That's the exact opposite of what successful traders do. So here's the truth. Until you can stick to your entries and exits with discipline, until you respect your plan more than your feelings, you're not executing, you're guessing. And no matter how good your strategy looks on paper, if your execution sucks, the results will too. Alright, so let's get to the point. Are you trading tools you don't fully understand, like options, futures, leverage, complex indicators? Do you actually know how they work? Because a lot of traders blow up not because they're dumb, but because they're overreaching. They think trading options makes them advanced or look cool or whatever. But if you don't understand Greeks, implied volatility, or how premium decay works, you're basically lighting your money on fire and hoping it doesn't burn too fast. Same thing with leverage. Everyone loves the idea of turning $100 into $1,000 with one good trade, but that sword cuts both ways. For example, using 10-to-1 leverage without a proper plan is like driving a Ferrari with no brakes. Yeah, you can go fast, but you're gonna crash hard. Here's the fix though. Keep it simple and master the basics. Trade spot before you touch options. Understand your risk per trade. Use position sizing rules like the Kelly criterion or a fixed percentage model, because you don't get points for complexity. You get paid for clarity, control, and consistency. So ask yourself, am I trading what I actually understand, or am I just trying to look smart while I stay stuck? Now, ladies and gents, if you're someone that currently trades options, I suggest that you just stop and switch to either Forex or futures. Why? Because it's just a lot more simpler and just a lot more easier to do, okay? So stop wasting time and start making money. Okay, so this slide right here, this is the part that separates amateurs from professionals. You can have the cleanest charts, the sharpest zones, the best strategy in the world, but if your risk management is trash, you're not gonna last. So here's the hard truth. Are you risking more than 2% of your account per trade? Are your stop losses optional, or are they locked in every single time? Do you even have a maximum drawdown rule? Because most unprofitable traders don't. They're playing the market like it's a casino, hoping for a win, praying through a loss, scaling up when they shouldn't, doubling down when they're angry. That's not a strategy. That's emotional chaos with a TradingView chart in the background. Here's how pros play the game. They only risk what they're willing to lose, usually 1 to 2% per trade. Some even risk 0.5% per trade. They use hard stop losses, automated, not manual, not emotion. They set rules. If I hit this drawdown, I stop for the day, period. Because the goal isn't to avoid losing trades, it's to avoid losing control. If you're letting one bad trade wipe out a week or a month of progress, aka Donvo, that's not bad luck. That's bad risk management. So ask yourself, am I managing my trades like a business or gambling with better graphics? Let me ask you something that most lazy traders don't want to hear. Do you actually review your trades, or do you just keep trading? Be honest. After a session, do you look at what you did right and wrong, track your setups, write down how you felt, or do you just say, whatever, and move on? Because here's the deal. If you're not reviewing, you're not improving. The best traders treat every trade like data. They journal it, they tag it, they grade themselves, not just on results, but on execution. They ask, did I follow my rules? Was this setup valid? Was my mindset sharp or emotional? And here's the crazy part. They don't just celebrate winning trades, they celebrate discipline. If they followed their plan, but the trade lost, it's still a win in their book because consistency beats randomness. Meanwhile, the average trader just reacts. Win equals I'm a genius, and loss equals the market was manipulated, aka ICT. No accountability, no growth. So I'll ask you again, are you reviewing to get better or just trading to feel busy? Because those are two different careers. Alright, so let's talk about biases. Mental traps that sabotage your trades before you even click the button. Here's the big three. Number one, confirmation bias. You're in a trade and suddenly every candle, every wick, every news headline confirms your bias. You ignore clear signs the setup's invalid because you only want to see what proves you right. Number two, overconfidence. You win 3 trades in a row and suddenly you're a genius. So what do? You size up. You take riskier entries. You stop following the plan. And guess what happens next? Boom, blown trade, blown ego, blown account. Number 3, attribution bias. When you win, it's a skill. When you lose, it's the broker, the news, the spreads, the market maker, Mercury in retrograde, anything but your decision making. These mental traps are sneaky because they feel true, but they distort your learning. They keep you stuck. So how do you fight back? Data, discipline, detachment. Journal your reasons for taking a trade before you take it. Stick to one position size no matter what your last trade did. Review your losses with ownership, not excuses. Because here's the truth, the market isn't your enemy. Your unchecked mindset is. So ask yourself, are you trading your plan or just feeding your biases with a chart in front of you? Alright, so let's talk about strategy and market fit. Because even a good strategy will fail in the wrong environment. Here's the mistake a lot of traders make. They find a setup that works and then try to force it in every single condition. Trending market, use it. Choppy sideways market, still use it. News days, low volume, NFP week, doesn't matter, they force the same play. That's like trying to use a sniper rifle in a bar fight. Wrong tool, wrong time. So ask yourself, am I using one strategy for all markets? Am I ignoring volatility or the market's tone? Am I trading out of boredom instead of opportunity? And be honest, how many of your trades happen just because the market is open and you feel like you should be doing something, right? Over trading is the #1 killer of edge. More trades doesn't mean more money. It usually means more fees, more slippage, and more emotional baggage. Here's what high-level traders do. They build separate playbooks for trending and ranging markets. They trade less, but with more intention, and they let price come to them. They don't chase. In fact, reducing trade frequency by just 40% has been shown to improve profitability by over 20%. Just by cutting the low quality setups. So don't just ask, is this a good trade? Ask, is this the right time for this strategy? Because the difference between a sniper and a spray and pray trader, timing and discipline. Alright, this is the part nobody talks about, but it matters just as much as strategy or psychology. Let's talk operational discipline. Here's the question. Are you treating your trading like a business or like a hobby with a dopamine button? Do you trade just because you're bored, chase setups to feel productive, not because they're valid, rely too heavily on indicators or bots without checking if they still fit current market conditions? This stuff is killing more traders than they realize. Overtrading from boredom is a silent killer. The market's slow, so you force something. You take a low conviction setup just to feel busy, and then you lose, get mad, and start revenge trading. It spirals fast. Or maybe you built a bot or found a slick indicator that used to work, but now market conditions changed and you haven't adjusted. You're still using pre-2020 logic in a 2025 environment or 2026 environment, whatever. That's a recipe for chop and losses. So what's the fix? Set circuit breakers. Stop trading after 3 consecutive losses. Just stop, come back fresh. Or you can do monthly audits. Check if your tools and indicators still perform in this market. And number 3, reduce screen time. Trade your plan, then walk away. Don't sit there waiting to force something. Because here's the truth. Discipline isn't just about entries and exit. It's about routines, reviews, boundaries. And if you can't control how you operate behind the scenes, you won't last long in front of the screen. Now, ladies and gents, I just want to add a little bit more onto the bots or even an indicator, right? So let's say your bot or your indicator tells you when to buy or sell. You have to understand that there might be a month or two where the bot or the indicator might not perform well, but the next month or two afterwards will probably recover those losses you had the month or two before that. So you have to be patient and you have to look at your data. If your data says that this is something that could happen, be prepared for it. All right, so let's zoom out for a second. Even if you're doing everything right, clean setups, solid psychology, good risk management, there's still some hidden forces working against you. Let's talk about the structural challenges that most retail traders don't even realize exist. First up, payment for order flow at PFOF. This is when your broker sells your orders to big firms instead of sending them straight to the market. Why? Because they make money off it. But you get filled slower. You pay more in spread. Over a year, that can cost an active trader $2,000 or more per 100K traded, just in hidden friction. And there's latency games. You hit buy, but before your order hits the exchange, high frequency trading firms are front running it by milliseconds. They're eating the move before you ever had a shot. Dark pools, spread widening, limited data access, all tilted slightly against the average trader. Now, this doesn't mean you can't win, it just means you need to stop pretending the playing field is level. So what do? Be selective. Don't overtrade into these traps. Trade high quality setups only, where the edge outweighs the friction. Use limit orders where it makes sense. Avoid getting slipped every time. And most of all, stop blaming yourself for every tick that doesn't go your way. Sometimes it is structural. That's not an excuse though. It's intel. The smarter you trade around the system, the more consistent your edge becomes. So by now you've seen the real problems. It's not your chart layout. It's not always your broker. It's not that you just need one more course or one more indicator. If you want to win long term, you have to rebuild your foundation. And there are 3 pillars to that. 1, psychology rehab. Journal every trade, use pre-commitment, decide your entry, stop, and target before you click. Take breaks, rest your mind, use circuit breakers to stop spirals. Number 2, strategy strengthening. Don't just trade what looks good, backtest it. 300 plus samples minimum. You already know, I made a video about this, check it out, okay? Build separate strategies for different environments, trending, range bound, news days, so on and so forth. Track every factor, volatility, volume, time of day, treat it like science. Number 3, execution discipline. Every trade needs risk defined, period. No stop loss, no trade. Risk a fixed percentage, never overexpose. This is what real traders focus on. They don't try to be perfect, they just follow structure, stay consistent, and adapt. Because when the foundation is solid, the strategy has a place to live. When it's shaky, nothing works, not even good setups. Alright, so let me leave you with this. There are only 4 types of trades in this game. big win, small loss, big loss. If you eliminate that last one, the big loss, you're already ahead of 95% of traders. So no, trading success isn't about never losing. It's about losing well, losing smart, and losing small. And when the wins hit, you let them run without fear. Most people overcomplicate this, but trading is simple. It's just not easy. So if you're serious about becoming consistent, this is your blueprint. It's not a shortcut, it's not a cheat code, but it is the truth. And if you build on this foundation, I promise you, you'll stop surviving the market and start mastering it. Now, obviously, guys, I will not leave without giving you some biblical wisdom. And this is from Proverbs 13:11. Dishonest money dwindles away, but whoever gathers honestly increases it. And don't forget to join the Discord and leave your comments down below, and I will do my best to answer. So with that being said, guys, I'll see you all in the next one. Peace.